Guys, I just got wrapped up with an amazing interview with Joel, Coach K. You guys are going to love this one. And I just wanted to say, this interview is going to be about an hour long. It's going to be a trading session, right? This is where you just go through charts, you flow, and you just kind of let the creative energy keep going. So if you're looking to see something broken down, you're looking to see a broken down video, then you have to accept that you're not always going to get information how you want it. Right? When you're trying to learn things and you're trying to download information and educate yourself, you have to learn how to slow things down and digest them. So I would listen to this video in the background if you're just chilling. But if you're trying to learn, I would write notes and I would watch the video slowly and go through different sections, because it's important for you to be prepared for the bull market. Right? We're not far out. So if you want to learn, you have to be willing to slow things down and digest them at your pace. So this is going to be an amazing interview. We're going to go over tons of different tokens, tons of different trading strategies, and the Ichimoku trading strategies. My mentor for this thing. So enjoy the video, guys. And if you want to meet Joel, you want to see Joel's channel, check out the links in the description. Peace. What's up, guys? Welcome back to the channel. And I thought I'd bring on somebody very special. This guy is one of my many mentors, but he has shown me specifically how to trade better, not trade like a degen, not just fucking throw money about, but invest properly with an interesting strategy. It's a Chinese strategy. This is Coach K, so make sure you follow him in the description. But Joe, I'll let you introduce yourself, bro, and then break into some charts, because I know that's what people want to see.
Yeah, for sure. People know me as Coach K. My real name is Joel. I've been in crypto for 10 years. I've been full-time 7 years. I've worked with over 50 projects, from stuff like, major brands like Eternity. I've worked with some of the big blockchains. I'm working with other big blockchains right now, supporting their ecosystem, helping them do tokenomics. But I, started out in this industry as most people did, as a trader. Obviously you don't start out as the best one, but over time you develop a strategy and you build alpha and you learn what patterns to look for. And about, I think it's like 5 years ago, I was introduced to the Ichimoku Hinko Hayo. It's actually a Japanese study. Basically one of the oldest strategies there are in crypto, and in stocks and in Forex, etc. It works across all different mediums, but in crypto we have to double the settings because there's no open and close. So we double the settings in crypto because it's literally open 365 24/7, and because of that, obviously that affects the normal market movements. In the stock market, we open and close, have weekends off, etc. So yeah, I have, and a lot of other people have been looking into the Ichimoku, which is better known for its clouds. People always talk about the cloud. And yeah, basically I've taken price action trading, which is, basically looking at candles and understanding the candlestick patterns, using support and resistance, which is the basis of everything we do. And then adding in, the Ichimoku on top of that with some EMAs. My chart looks a little bit more busy, but it's just kind of how I understand it best. And everyone could change colors and do whatever they want. And basically the best traders don't follow other people. They follow a strategy. We don't listen to, what your friends say, what your mom says, what your brother says, what the big influencers say. You actually learn to do it by yourself. And that's how you become a good trader, because you don't have this constant yin and yang of people saying it's going to go up and go down. You're just having your own analysis about what's happening. So we can jump in and I can give a little bit of an introduction to this if you haven't used it before. I have videos on YouTube on my channel. Something else I've done as well as a key opinion leader. I've made like the basics around this, and it's the beautiful part of the Ichimoku versus a lot of the other trading strategies is you're not trying to make money very fast. You're trying to make a lot of money over a longer period of time. And you're following a checklist instead of trying to just like think that maybe it will go up and you're not really 100% sure. This is like, if all these checklists happen, we're going to go long. If all these things on the checklist happen, which are the opposite, we're going to go short. And we use the daily time frame up and all the way down to the 4 hour. But personally, unless it's in a bull market and things are moving extremely quick because there's lots of retail, I use only the daily. And it's obviously helped me call tops and bottoms of the market for the last 5 years, and only made things a lot easier. So let's jump into charts, because I think that's why people are here. They kind of want to understand it a little bit better. And so we're going to start just with some BTC, because I think that's our mainstay where we want to start. It will help you understand, you know, what to look for and what I look for, and I'll kind of help you guys with that so that you can be more successful using it.
Just hit share, bro. Let's go. Bro, it's actually interesting what you was talking about as well in regards to the daily strategies, because
Yes.
most people, especially on YouTube, when you're doing daily videos, when we're just trying to push out content, even me, to be honest, you're pushing out videos, but there's no trades to be seen. There's no trades to be seen for a while. And most people are trying to force these trading patterns, which don't even work, right? Recently, people were talking about this flag, and the flag got wicked out on the top. That's everybody's shorts. Got wicked out on the bottom, but nobody wants to talk about it.
Yeah, I mean, and the thing is, it's still held its level, right? Like, that's the one thing I look for. Like, we're looking at support and resistance. Where is the part where the price cannot get higher and breaks down? And where are the points of the price where the price tries to go lower and keeps going back up? So we kind of seen that here. I got wicked out of this trade just by a bad stop loss placement. I had it just a little bit above this wick right here. Usually I give it a little bit more, and I got wicked out of this short. Now, obviously I'd be break even right now, but getting wicked out kind of sucks. But it's something as well as a trader, like, you're going to make those mistakes. And most of the time when you see a 3 inside down, you never even have that happen again. Like, here's another 3 inside down, usually it just keeps going down. So this one, it's like almost as if it's worked so perfectly, and I can show you. This is not the Ichimoku, but it's one of the BTC trades I make on a constant basis, and it helps me find bottoms and tops. So here's a Bitcoin's bottom.
What's the 3 inside down, right? This is the 2 candles to the left.
So how it works is, you see the price action on a 3 inside up and down on a daily. It's basically a gigantic reversal indicator. So that means that when you see this at the bottom of a trend near support, generally that's a bottom indicator, and it will probably start to go up from there. So you get usually get like a bearish candle, a very large bearish candle, which, you know, closes out really low, and the next candle closes inside of that big candle. So you can see that the blue is all the way up to the top here. So this candle went up, but it would close before being above this candle. So an inside candle means that it's a smaller candle than the first one, but it's closing inside. Yeah, and it's a bullish candle going up. It's not going down more, it's going up. So we're closing somewhere between halfway and a little bit higher than halfway of this candle. Now, the 3 inside up means that the third candle, the next day candle, will close higher than the original candle, which tells us that there's very likely a reversal coming into the market. Now, this has nothing to do with Ichimoku. Good traders don't just use one piece of information. Price action trading, like using candles, is actually the best way to trade, but things like Ichimoku are a tool that help you be more accurate and also give us better indications of where we are in the market. So for example, I'll give you a really good example of this. When we were at the top of the market, so let me just go up over here. We were at the top market. People are like, how the flip did you know that we were going to go down all the way from 60K? And how did you know we're going to keep going down? How did you know in December we were going to probably move up a little bit and then break back down? How did I know that, right? And thing is, when we start seeing indicators like Ichimoku, it tells us stuff before it happens and also in the future. So you can see from right over here, you have 30 days into the future. You can see that the cloud went from bullish to bearish, right? You can see that from once you're right over here, you're still above the candles, but then you start breaking below. So you look over there. So now we're breaking below. So we're seeing bearish signs, and I'm seeing this bearish TK cross coming in on the this red level.
That's interesting. What? We're back in the cloud as well. That was an area where a lot of people were getting bullish. We were supposed to be going, I remember, it's like we were supposed to be going back to, you know, back to all-time highs. This was supposed to be the recovery, but it wasn't. We was back inside of that cloud, right? That's the bear. That's the bear.
There's many examples here. So we had a head and shoulders. This was like the first drop that we had from April, May, and then all the way through July, August. So with this head and shoulders, we had a 3 inside down right here. And I was like, all right, I thought we were going to go up to make a shoulder, which is why I had the up sign. And then I was like, oh man, 3 inside down, boom, short. Okay, so now you're shorting it. You're waiting. And look what happens. You get the same thing that just happened on our daily chart on BTC, a fake out breakout into another 3 inside down, and boom, we went down lower again. Here we
Exactly.
had a bullish engulfing. We didn't have a 3 inside up. You don't always get that. So just so you know, you always have to do any trade off of support and resistance, which is where the market comes to and what price the market comes to, right? So we could see here that this price bounced. This was a support level. This was again support level, support level, support level. Broke a little bit below, probably got people to wick out because they weren't looking at this low potentially as a level that they should, be looking at a stop loss, right? If they went long here, and then they got wicked out, and boom, then it starts sending back up again.
Yeah,
So
he was trading on the
this
day.
took a long time though. Like honestly, it took me probably 3 to 4 years to get to the point where I was like, okay, this actually makes 100% sense to me. I don't care what everyone else is telling me that I'm wrong and it's going to 70K, 100K, whatever. I'm looking at this and it's just dictating where my perspective is coming from. I don't have a personal bias about bullish or bearish. I look at the chart, it tells me we're bullish or we're bearish, or we're going to become bearish, or we're going to become bullish. So you can see those things, and you're not always going to be right. I'm not right 100% of the time. I'm just right a lot more than I'm wrong because I'm trading daily candlesticks. Just to
Yeah.
give perspective on that, we can go back because the 3 inside up, 3 inside down, there's a video pinned on my YouTube, on my Twitter. You can go check that out on YouTube or on there anytime you want. But it's one of the best trades that I do. So let's say we're looking at just when we came up higher and we go all the way down to the 1 hour chart. How much more information can wick you out, can confuse you. Now we do see if we're playing the support and resistance, every time we get to 31.2, 31.3, we break back down and we're generally going in a range, right? So we're seeing like, okay, up here, if we sell on this top and we come back down to around this bottom, we can sell up here, buy down here, sell up here, buy down here, sell up here, buy down there, and then sell maybe if we get up to 31. So this is what bots generally do, right? And you have to be really, really quick because then in 1 hour goes by like that. But then you talk about 15-minute chart and it becomes a whole new ball game. This is why I don't trade 15-minute charts. This is my whole entire chart. And you can basically see like it's covered in different candlesticks. And we have to zoom in to see them at a normal rate. This is like 1 day, right? So you have so much information. You get wicked out all the time. And wicked out just means you think it's going to go one way and it goes completely the other. You think, oh, here we're going to break out now. And boom, then it just shoots right back down to the cloud. And you're like, damn. And you're trading the same way, but with less patience. Whereas if you go to the daily and we reload the chart here, you can see that the daily is only giving us a few pieces of information a day, so we can be more accurate. It tells us what's happening across a whole day, the sentiment of the market for a complete day, and now we can make analysis over 72 hours that at the 72 hour when it closes here that this likely can go down because it's at a resistance level. You can see from the wicks here, from the level right here, likely this is 1, 2, 3, 4, 5 times. The 5th time usually either breaks up or down, was likely was going to break down, so you go short. And guess what? Then you're right. You think, oh, maybe you're wrong, but your stop loss is up here. So you could move it down. And then what do we have? Another reshort area where we have a Kijun bounce where, we're bearish over here. The price action is bearish. We have a retest on the Kijun, and we've had this TK cross that's bearish over here. So now I know I'm looking for that already. And boom, it comes down. You could reshort again, or you could still be in that short and add to it, which is what I did on Bitcoin all the way down to 17K. Then you see this big reversal. Comes down to the 200 EMA, comes down to this level. We get a 3 inside up. It's the bottom of this trend. We went from up here all the way down, 20%, and then it reverses off the bottom of this, and we start to go back higher. So then we get this move from over here all the way up from, I think, what is it? About 26K. You move it all the way up until this 3 inside down, which happened right there, and you're up 15% on your BTC, right? So you do 10x, you're up 150% on your BTC, and you're just sitting there chilling, and you made that. And now you can either go short like I did and get stopped out and lose a little bit compared, like, for example, this was when I set it up, it was 31,460 or something, like right around there. So I lose 2.87%, right? But my R ratio on the way back up was already like 3 times as much profit. So I don't lose more money. I use risk management. If I'm risking a let's say from here, if I'm risking, say, let's go below there. So let's say I'm doing a 6% loss and I'm losing $1,000. Let's give an example of that because it's easy. And then on the way up, I lose 1,000, but I make $2,600, right? Then I do the same thing. So I'm up $2,600. I lose $1,000 on this trade. I'm still up over $1,000, right? I'm up, what is it, whatever it is, like 1,600, right? So
the aim of this game is to be in for a long time, right? A lot of people trying to double down on the short, right? But they bitched out on the long. So they only made $500 on the long. And now they're trying to double down on the short and end up losing their whole bankroll.
Yeah, so that's like a typical gambler thing, right? I start with $10 a hand. If I lose, I do 20. If I lose, I do 40. If I lose, I do 80. If I lose, I do 1 feet. And eventually you just get to a point where you've lost enough times where you've lost all your money, which is exactly what retail traders do, which is why only 2% of us make money in this game. And about 1% of that 2%, or 1% out of those two. So 99% of people make, out of those, most of those lose in that 1% from 98 to 99, make a good chunk, but that 1% makes like 90% or 80% of all the gains in the whole entire market because they're not greedy. Warren Buffett said it, like patience is how you get to the point where you're really making real money. Patient money kills the people who are impatient. And like, that's what you see from people trading a 10-minute, 15-minute, 30-minute chart. They're impatient. They want to make money right now. Times like today, I'm looking at Bitcoin and going, this is potentially a short opportunity. We're hitting resistance yet again, right? We don't have really big conviction. The volume was nice yesterday, but it kind of wicked up and then wicked back down. So you don't really have a clear direction right here. So I'm looking at like volume has kind of been tapering off since up here. You can see the trend, right? Even on volume, we can draw a trend that the volume was up here and it's slowly been kind of dipping down like this. So likely it's going to potentially go even lower, and we're in summertime. Like you have to use fundamentals and technicals when you're a trader. You have to understand all sides, market psychology, fundamental analysis, and then you mix it in with the TA. And that's how you have the person who gets the direction correct most of the time, because, I don't change my chart. So anyone who goes and looks at all the calls that I've been making for the last, let's just go all the way back to 2020. These are all the calls I've been making since 2020, right? Up, come back down to this level, up, go around to this level, up. Okay, we're going to come down to this level, up, right? And we have a top, we have a head and shoulders down. Oh, we have another 3 inside down. Oh, I'm not in. You know what I was waiting for to come back in? I was with Kyle on a live stream. We were doing it. I said, hey, we have a breakout. I'm looking for the retest. Now, I talked to you about this an hour ago, Tyrell, about how when clouds can slope, it can come back down. So the cloud was sloping down. So it eventually came back down to our level here, and then it bounced. So I was in, I thought I was in here. I went up, it came back down. I was like, I'll just hold, I'll wait, let's see what happens. This was more for like a spot buy BTC. And then when I saw the 3 inside up, that's when I went in heavier because I saw we're at the bottom. This is probably the end of that trend. Let's go long. And then, you saw right around here when we broke below this level and we retested it, right? Because we look for a break below a level and then a retest, which is what I just showed you on BTC right now. We're retesting this now bearish, which used to be support, turned into resistance. So that's when I was like, okay, we're likely going to come back down to this 50K level. And then, then I was like holding that short and I'm like, okay, I'm going to add more around 4. I think it was around here. I added more on this December pump.
That's a retest of the cloud. Right there.
Yeah, and then I was like, I think we're going to go down to at least this level, 42. And then 42 also retested bearishly right over here.
Mm-hmm.
So it's something that like when people watch videos like this, they're always like, I just don't understand anything. It takes time to learn it and you have to spend time. You want to make money, but you want to be a lazy fuck at home, sitting there and waiting for your influencer to tell you what you're going to do. The influencer's in the trade like for an hour before he tells anyone because he wants to make sure that he gets in, he's got his thought process down. He's not involving too many people and clouding his judgment or her judgment. They're in the trade and they're looking at it and going, okay, what's going to happen next? They make their trade, they go and they look at analysis and they go, yeah, that's right. And then they tell other people about it. So by that point, you may have lost, you know, from here all the way down to there, you're already losing like 2%. And if you look and learn the strategy, you get in at the right time, right? And I think that's why people lose, to be honest. They're just not patient.
Because it's exactly what you're saying, Joe. People aren't seeking to understand, right? If you look at something and, you know, like what you're saying, if you're explaining this and people ain't understanding it, then it's simply because they haven't learned the language, right? It's the same as somebody comes and starts speaking Thai, right? You're not going to be able to understand it if you haven't learned the language. Beauty of finances, it doesn't take you 4 years of study and hours of listening to somebody to understand this. You can understand this in 5 minutes, right? By going in your group, right? You've got a whole tutorial in your group, right?
I have a whole trading course, 2 of them, one for price action. So you learn what 3 inside up, 3 inside down, support and resistance, all that is first, because that's the basis of all the crypto strategies, all the trading strategies, all the strategies are based off support and resistance. That's really all you need to know. If you understand candles and that, you don't even need the Ichimoku. I use it as an excess tool to give me more confluence so that I feel more confident going into the trades, because I realize that most Ichimoku trades that I take, there's only 4 that I really take most of the time. I look for the same 4 things over and over and over on daily charts. I could go through 300 charts in an hour and know exactly where all those coins are just based off of looking at that alone, which gives me a time-saving device and also doesn't make me have to sit in front of the computer all day, which is what a lot of people do, wasting your whole fucking life. And you're literally losing money because you're watching all your trades go up and down, up and down, up and down. It makes you nervous, it makes you scared. Whereas most people that are doing that successfully have trading bots. They don't even see it. They just get reports every day, or a report that, oh shit, your trading bot's not working. You need to do something right now before you lose all your money, which happens most of the time. This happens most of the time with trading bots. But here's a really important thing I want to point out. Everyone said you didn't know when Luna was going to happen, or if it was going to happen, or Celsius, or BlockFi, or all this stuff, right? How does it matter that, you know, TA is fake? You were lucky. No, I wasn't. The market went bearish. The market went bearish all the way over here. I was already talking about it here. It was confirmed over here. It was reconfirmed when this broke down over there. It was confirmed and confirmed and confirmed not to be in this market. It was already showing us we're not going to go higher. I knew what part of the cycle we were in. Generally, we get to this point and that's the end of the cycle. That's a year after halving right there, April 2021. So that already tells me that we just had some anomaly. And if you look at the volume in the market, you know, we can go here. Volume was way higher over there than it was on the when we started going back higher. You can just see, if you watch the line and go back on the bottom side of this, that there was way less volume in the market for this pump back up. So it was actually an anomaly. It doesn't normally happen. So understanding market cycles, psychology, fundamentals, and technicals saved me from being in BlockFi, Celsius, FTX, all that stuff, because once the bear market starts, that's when the scams, that's when the hacks, that's when all that stuff starts. People can't make easy money, so then now they need to make money from screwing people over, which is what happens every cycle. So looking at that, I didn't need to know about any of those events happening. I was already short. I was like, yay, these things are happening, not for my friends that are getting wrecked, but for my freaking shorts, because I was making more money. Because I already expected this to happen, and no one knows what event was going to be. I never said I would know that BlockFi or Celsius, but it let me be in the right side of the market all the way till 17.5, when I thought, okay, this is breaking back out right here, 17.6. Right on this candle is when I exited my position. We failed over here. I waited till we started breaking up, and I exited 17.7. Sorry, just over 17.7 is when I got out. But the point is, it was like a clear indication from my 3 inside up that it was time to start buying BTC here spot and to go long when we broke out here. So I do both. I go long and buy spot, use the money I make from the long to buy more BTC or buy more assets with profit from the market. I don't even have to put more money in. This is what everyone's goal should be. And so I just showed you guys from the very top, you could have been short, or at least out of the market, mostly way up there before all these crazy events happened. And guess what? At the bottom of the market, I already knew we were at the bottom. I called bottom in December. In December, when we broke up, right, when we were not December, sorry, in January, I was confident we were going to be bottomed because of this and because of the breakout. And so, you know, these things, I still stay confident we're not going to go back to that bottom again. This is done. The bottom is over, right? We're going to probably come back to 22K. It's possible we even come back down to 19K, but we're not going back below 17.7. I don't think it's going to happen. And I can confidently say that without feeling nervous that I might be wrong. I'm pretty damn sure that's going to happen.
That volume's getting real. Volume's getting real low compared to when we
Well,
broke.
what's happening? Again, now your fundamentals come in. You have everyone on vacation. Last year in May, barely people could travel without a COVID pass. So people didn't travel last year. People have money now who hated vaccines and stuff, or like the ones who had a lot of money. A lot of the people that did not get vaccinated were the very wealthy friends of mine. And they were like, yeah, we don't want to do this. So now all of a sudden you have this open world where everyone can go travel. So people are taking their kids vacationing. My kids' friends are all on vacation across the world right now because they can do it this year. And so volumes, of course, are going to dissipate in summer because people are now taking their kids to do stuff. And the good thing about low volume and the bad thing about low volume is we can pump and we can dump extremely easily, which is what we saw on this candlestick. And on that candlestick, it's very easy to move a market when not a lot of market players are there. Just because if there's not everyone trying to buy something and no one's actually buying anything, every time you buy something, it moves up higher. It's like a low liquidity shit coin. When someone buys like $10 worth, $50 worth, sometimes it moves up like 2%. So they just don't have any liquidity. So Bitcoin, when it has low liquidity, moves fast too. So you have to understand in summertime months, they say sell in May and go away for a reason. And it's mainly because they want you to think about the fact that people aren't really trading and you'll also get wicked out as a trader. So, but really, ultimately, there's only a few pieces of information when you trade in the Ichimoku. There's your Chiku span is it's 30 candlesticks back. So 30 days ago, this is where the price was compared to now. So it would be bullish. It's above the cloud. It's above the candles. So it would be bullish. We look for this TK cross. So when the green level crosses above the red, now we have a fast EMA above a slow EMA. So that's bullish. If the slow EMA is above the fast EMA, that's very bearish, right? And then you have the cloud itself. So it tells me, it's green, it's thick, it's bullish. If it goes red, it becomes quite bearish. So you can see stuff like that. We just go back here. It was very bearish, very bearish. And then we have an edge-to-edge trade where we break in the cloud, we go long, and we aim towards the top of the cloud. So like we're looking to get to there. And then if it breaks out, you just kind of hold it because breakout trading in the Ichimoku is generally a directional trade. It tells you where the market's going until it does something like this and breaks into the cloud. Now you get swicked. You get basically stopped out over here because you're thinking, oh, it's going to go lower. The bottom of the cloud is very close. There's like a $2,000 difference. You think maybe it's going to come back down to this level and then you get wicked out. So being a trader is not easy. You're going to have a lot of learning lessons in this game. And if you haven't got wrecked or lost some money on bad trades, then you're not really a trader yet. You have to learn how to lose to win. It's like the age-old adage. So yeah, Terrell, you can like what's it called? You can edit that out because I feel like it went a little bit too long. So edit that to be a little bit shorter with the major points will be good. Let's go into other points then. I think it's good to look at.
I think I'm gonna let this one roll, bro, because at the end of the day, this ain't here for entertainment. This is here for education. So if people really want to learn, they're getting a free opportunity to learn here, man. So you take your time.
Of course, no problem, man. So here you see like ETH has already had a bearish chart. Like, so it's starting to turn bearish. We have this Kumo twist, which is basically the cloud is bullish, starting to turn bearish. It's kind of weakly bearish, obviously, because it's a very small baby piece of cloud. So this could go down and above very easily, like you saw over here, down and above. But the Chiku span's kind of almost in a bullish bearish territory. We're in the cloud. We call that the turbulence. If you're on a plane and you don't like being in turbulent weather, then obviously you don't want to trade in turbulent weather. So you kind of think about being on a plane. You're in turbulence. You don't really want to fuck around with that. You want to be clearly above the sky and cruising and not being thrown around by the turbulence in the market. Or you want to be clearly going towards landing. So you're below the cloud and it's smooth sailing. So inside the cloud, we don't usually trade unless we just break in from above. That's an edge to edge trade. And that's something that I like to do. So ETH is one of those ones right now where like, it's not really one of the trades that I would be taking.
Okay.
It's something that if we break down to the 4 hour, it also still is in the cloud. And on the 4 hour, we have, there are slow EMAs above our fast EMA. So we had this bearish Kijun bounce, but again, inside the cloud, I don't trade. So we're just going to leave that. We're going to leave that for now. And if you're spotting ETH, it's going to go higher long term. So you're not really looking to sell off your spot ETH. This is more for trading. So that's how you have to look at it. And then we go ETH BTC. We're looking at, ETH is looking at not so hot like on versus BTC, but we're starting to see that BTC might have lost a little bit of its steam. Things are kind of starting to potentially change here. So we have to kind of monitor that. So let's get off ETH and BTC because they're kind of boring. And I'll show you kind of how I cycle through these charts. So, we look at ADA. ADA is like not really super bullish, on the 4 hour. But we go to the daily and we can see a lot less information, which is how we make better trades. So you can see that ETH made a 3 inside up, a very, very shallow 3 inside up. Didn't really think that was confident. But if you were going in that trade, your stop loss goes below your wick, always below, give yourself some room. And then you're aiming for, let's say, the Kijun, or we're aiming to break in outside of the cloud on the other side. So that's what I'd be looking for in ADA. But right now, again, we're kind of in this no trade zone. I bought into this wick because it went into one of my zones that I've had, my weak buy zone. I don't think we're going to get to my strong buy zone, but you always have to plan. And if you fail to plan, you plan to fail.
Hey, man.
Algorand, I got this wick, went up, retested. We had a Kijun bounce. So I talked about this exact same trade again. Kijun bounce came up. We're bearish here. We're underneath the cloud. We're bearish. The fast EMA is above the slow. The slow EMA is above the fast EMA. That's bearish. So all these 3 check marks are there. We retested it twice. That's a short for me. And now you're coming back down and looking for, where is the bottom? Is this the bottom? Is that that's where it's done? Or is Algorand really going to retest this low or make a double bottom there? So I'm looking for that. Aptos, some alpha for anyone, any project that has tokens that are getting distributed, avoid them like the plague during until the bull market. You'll likely lose money with them until the bull market. And even in a bull market, you may not make as many gains because people are getting tokens at a lower price and dumping them on you. Atom, another one, it's kind of been an anomaly compared to a lot of the other projects out there because it only dumped this one time in June. It's kind of been like floating around Cosmos. So we also look at like from the top to where it is now, it really hasn't had this insane like 95%. It had like 85 there, but right now it's mainly kind of focused around like 70-80%, which is good. It shows their strength, and there's a lot coming from Cosmos's ecosystem this cycle. So I'm looking from a fundamental perspective of holding this for the bull market. And if we get into my other buy zones down here again, I'm just going to continue buying and layer it in on DCAs. And when it comes back to its all-time high of, let's say, $40, you're going to make a really, really nice gain on your average of like $9. It may not seem like much, but they haven't had a full, real, proper cycle with the ecosystem. So another one like that is AVAX, still has tokens distributing, holding this level right now. Let's see if it holds forever. A0 had a great start. 50% of tokens were distributed. They pumped it. And of course, 50% more tokens are coming out. So people also then sold off and took profit.
It's tough for a lot of these coins releasing in the bear, man. Even like World Mobile, man. World Mobile risk has been getting absolutely just shredded.
No, man. World Mobile distributed all their tokens at the start of the bull market, as per my advice.
But it keeps going.
All the tokens were given out to every single person before the bull market really started.
It keeps going. Like, that's what I'm saying. Any of these tokens right now, the bottom's not in yet for a lot of these tokens with distribution. Even if it's had distribution, like World Mobile, the sell pressure, it just keeps going until we hit full. Like, once we hit bullish, it's gonna recover straight away, instantly, right? So obviously buyers.
Yeah, I mean, it won't take much for a lot of these coins to recover. I mean, I'm looking at EGLD as one of my biggest bags that I've loaded up on, mainly because they have a great ecosystem and the price is down from like $600 almost all the way down to like 30. I picked up a ton at $32. It was my average buy price so far. So around here, I picked it up around there. I was looking at those levels in this area, in this zone for a long time. Bought a little bit up here, and then I kept buying at different levels. So I bought again at 38. And I just kept scaling in bigger and bigger buys until we hit that $28, $29 range like a week or two ago. And I picked up like, 30% of the bag right there. So we averaged myself down pretty nice to like 32. And I think EGLD, goes to 600 again, you're like almost 20x. And this could go higher because it's fully distributed. It's out there. There's no more new tokens being distributed into the ecosystem. Phantom's another one. Got in my week buy zone only once. Pumped insanely to 64 from like 16 cents. Now it's back down. Again, all the charts look very similar. If you look at them, this is why I can easily judge where the price is going. Here, I'm like, no, this is bearish, not looking at it. And I can do this for most. It's bearish, not doing anything with that one. H-bar, I'll buy it if it goes in my lower zone, but not really doing much with that one. HTR, same thing. Rejected the bottom of the cloud. It's not really bearish, but it's not really bullish unless we poke into the cloud up here. So, there's some that look a little bit better than others, but when I cycle through everything every day, we're really not doing very much. Most projects are only, look at this, they're up like 1% or less, 1 to 2% or less. This is like watching stocks. It's got really boring. Now, Litecoin's the outlier. Litecoin's a legit outlier because of its halving. Also because it's got a bullish chart. It's above the cloud. We have, this Chiku span that's bullish. We have a TK cross that was bullish, and now we have a bullish Kijin bounce trade. Wow. So it came back down to the equilibrium, went really far away from it. Equilibrium is like when you have enough products in your warehouse to sell to all the customers that are coming in. So that's really like your perfect amount. You're not over ordering, you're not under ordering. Then when you get way over here and you have an empty warehouse, right? Because everyone's been buying everything in your warehouse and it's kind of like when you went to Villa Market in Phuket during like the high season and you could barely get milk and cheese and stuff because everyone bought everything. That's like the bull market, right? It's the top. Now, when low season comes, right, people start going back home. They're not really they're not in Phuket. It's raining, whatever. So the market's now readjusting. And if you go to Villa Market, it's fully stocked. You can get whatever you want. You never have to like try to look in another location. So that's what the Kijin is, right? And it's both ways. If people are selling every freaking thing they have, right, then and no one's buying anything from Villa Market, now they're going to have all their orders coming in. They're going to have way too much. So they need to put things on sale, right? So that's like that fire sale. Then people come in way down here and they see those big sales and they're like, oh, we should start buying again because we're too far away from this red level, our Kijin, our equilibrium. So that's why I like using the Ichimoku. It literally tells me the market as a whole in a few seconds. Yeah, but Litecoin, I would say, is the outlier right now compared to most of the other charts.
Is that getting close to a 3 inside up on the daily as well? The daily's not finished yet. We finished.
No, the daily needs to close like above. Yeah, it would have to. But honestly, you have like resistance from the Tenkin. It would need to close above that. So it need to close above this level right here. I would look for it to close at $98, $99 before I would long. And then again, before you long, you also have this resistance all the way up to this level. In between. So 102, you really want to clear all that and start going higher. And you can see this all the way back from the last cycle, right? We had this as a level of resistance, and then you have these wicks here, which could send it back down. It could send it up like we did over here on the far right at 114, and then it would send it back down because that was a really strong level that it would push to. And we can go back and see it was support here, and then it was support there and there and there as well. So that's how you pick resistance, and that's how you figure this stuff out. It's like, how do I know where to put support and resistance levels? Where does the price come to? What does it do on those reactions? You can tell where to draw those levels when you see it goes here and usually rejects. It goes here and usually rejects. It goes here in the past and it usually pumps. It goes here and it usually pumps. And then eventually it breaks down. And what you'll see here is you're going to see it retest it in a bearish way. Meaning, okay, finally it got below, right? It comes below, it comes and retests, it fake people out obviously there, and then it starts to come back down. And the good thing about trading daily is you're like already expecting it to go probably up to this level. So you're going to go like maybe even up to like here and give yourself a little bit of room, which I didn't do on my BTC trade, which is why it didn't work out. Matic's been interesting. I've been kind of watching that for a while. I'll show you why. It's been kind of on a really nice bull trend here. It had a 3 and setup right there, a really weak one, but one technically, but not really off resistance, kind of. So I didn't really take that trade. I've just been holding, you know, kind of buying it under 60 cents when we had that big dip. I bought it up, and that was where I was looking. But there's a couple things with Matic. They're apparently running out of capital, so I'm kind of being cautious with Matic because they do have a lot of investments and they
Yeah,
could go much higher.
that Polygon fund is in every single project. Like even projects where I look at it and I'm like, that's a shit project. Mike's in there.
Yeah,
Polygon fund.
that was their mistake. They tried to over support the ecosystem. Here's another one. Like, I mean, I really think they're gonna have a massive cycle. I think that they're one of the cheapest tokens compared to what they're creating and what they're working on and how easy it is to use their blockchain. Then I'm watching Quant because it usually pumps when everything else is dumping.
One's got that.
From June to October. If you guys go look at anything else from June to October last year, from 2022, you're gonna be like, what? It doesn't make any sense that it pumps so hard.
One's got that team of geeks, bro. They're onto it. They love it.
For reals. You have Rune. Rune's come down to my lower level that I thought and people told me would never come to, but we had all these former levels that it likes to come. Price likes to come back to where it started. And let's actually give you an example that isn't even crypto. Let's go to like the SPX. So I'm just going to turn off the Ichimokus and stuff and the EMAs just to give people perspective on what you look for without any of that crap. You don't need any of it. I'm just going to leave the 200 EMA. So everyone says, like, how do you know stuff, right? Price comes back to levels that it was before. So if we drew this as a potential level right here, this the stock market's a little trickier because it moves very fast. Let's say we put one here, we put another one right around, I don't know, somewhere around here. Just looking a little closer here. One sec. It's a good example. So this is a W breakout. W pattern breakout. Let me just move this up a little bit more right here. Okay. Price likes to come back to levels that it was before. So right here, you can see that we broke out. It was the first time it's ever been this high, this SPX, right? So it starts mooning like crazy into this gigantic ascending wedge, which is basically when it goes straight up. It doesn't have any, like, it doesn't come back down and retest anything. It just goes straight up, basically. And we don't have, this is all-time highs all the way up to this top right here. So we don't really have a point of reference. But when we see it start to break down, then we start looking for, okay, I can see one level right here is very clear, right on there. You can see it's gone to this level several times and come back. So I could say, okay, maybe it's going to come down to this weaker level, or maybe it's going to come down to this level where it really broke out, like really broke out to make a new all-time high because there was an all-time high there before. I look at that and go, okay, where's the price likely going to come down to? If I start getting bearish on this trend and think it's going to come lower, I'm going to look at this wick. Now, we call these liquidity pockets. Liquidity pockets are basically areas on the chart where the price comes down to and basically never comes back to. So, like, I see this liquidity wick here. I'm waiting for it to come back down again to an area where the price hasn't come back down to. And then we start looking at, you know, Fibonacci, or I just use this manually. I go, okay, what's a normal stock market dump? 30% is like a normal bear market for the stock market as well, by the way. Now we have it bottom out. Where's the price going to go to? Let me show you where the price likely is going to go to next. It's very likely going to go somewhere around here, right around there. So I'm looking and waiting. If I'm a trader and I've been trading this, and maybe this was your level a little bit higher because this is the top of that wick and that tapped over here, maybe I'm waiting for this now, for 4,600 before it comes back down, right? So levels just help me understand what's going on. Now let's go to something a little bit different. Let's go to what I like to call gold. So on my gold chart, I actually drew these years ago. I wish I could show you when I drew all the levels that I have on this chart, because it would actually give you some crazy idea. I went back before we even came anywhere close to this level. I drew these way, way, way back here. Let me show you how far. I call this, and the reason why it's orange, it's a golden retrace level. This is a level which the price generally has come back to either as a bullish or bearish level, okay? Now, if I go across all the chart forever, that was a level where I expected it to come down to. And, hold on a second here. These are ETFs. So guys, you're looking at Bitcoin ETFs. This is when the ETF started, right around here, I believe, in 2022. And that's what sent the price so high. What do you think is going to happen when Bitcoin gets the ETF?
That's gonna be crazy.
It was a BlackRock ETF too. So
Copy paste.
Yeah.
Like, man. They've probably been accumulating the all year, the last 2 years, buying in the BlackRock.
So, you know, when you're doing this, look at this level right here. Look at how strong this has looked as a bounce level, as a breakdown, as a bounce level, as a bounce level, as a bounce level, as a bounce level, bounce level, bounce level, right? Like every time it bounces around this level, what do you think is going to happen to the gold price when it came to this level? Well, it's not really doing a strong one right now. Because guess what it's doing? It's bounced off of it once, twice, 3, 4 times. If it touches it one more time, we're very likely to either see it break up or break down. Now, when we're going on the downside, 1, 2, 3, 4, it shows that people keep trying to push it down. That's why there's a big wick. People sell off hard, people buy it back up. People sell off hard, people buy it back up. So it's likely that if they try to keep selling off hard, that eventually it will either break down or the buyers will come in and push the price higher. That's how the market works from a psychological perspective.
That's consulting.
Understand that's important.
Well, at that level, you can like sell to yourself, which a lot of people understand, right? You can, once you got infinite money, you can really start playing with it, playing yourself. They could be buying this up right now, ready to send it.
Absolutely. Again, another example of levels that come back to the same area, right? You can see all the way from this blue, I can just draw it from right here. Let's say you were looking at that level from before. Look at all the times the price came up, broke down, support broke up, support broke up, retested, went down, retested, went down, retested, went down, broke up, retested a bunch of times right here, broke down. There's that white wick. You see that white wick up there? Boom, retested. Now it starts coming back down. So like, it's really easy to trade this way, but it's on a daily chart. You know how long this was from? Let's say you started plotting this in 2016. You're talking from 2016, it went to that level and it came all the way back to that level all the way in 2023. That's why I say the price comes back to the same spots over and over again, which is why all of our trading strategies are support and resistance based. Because I know now Bitcoin is like the stock market doesn't really go down that much. It goes up, it goes down, but it doesn't go up or down too much. So we can kind of project where the price will come down to. That's also the reason right here, let's go back to last bull market. Everyone kept talking about 20K. Here was our 20K level. You have to have some support or resistance there. There has to be something there. But until that, we only had this one little wick. Well, guess what? That's not a level of support or resistance. That's just one candle. So where was the actual support? I kept telling everyone, if you go back here, the support was between 17,000 and 17,500. That was where the price had some action in the past, right? Then we go across to the next bull market, the same level from 17,500. That was our where we are right now in the cycle, to be honest. And then we go back to this 17,700 level. Well, between 17, look at the levels, between 17 and 17,700 were the levels of support. And guess what happened when we broke above it? We started to move. Simple as that. Then we go back again through the next cycle. You see all this shit happen. Look what happens again. Price goes down to what? 17,800, 17,700, the same exact level I drew on the chart from way back then. What do we look for? People said, oh, it's going to hold. It will never go below 20K. Well, we went below 20K right to the support. We went above. Everyone said, okay, that's it. And then I was like, dude, like we have this other level of support way down here at 15. And there's even stronger support at 15 because it's touched that level before. The price action touching those levels gives us more support or less support. Yeah. So if you don't touch it many times, it's not really strong. If it touches it a lot over a long period of time, it's a very strong support.
You're more confident.
So we look for those. So yeah, that's basically how you trade, you know, how you think about it. It's something that everyone always is like, teach me how to trade. And you probably watch this video and go like, that is overwhelming amounts of information. That's basically how it is. So I am a teacher from before I was in crypto. And what I like to do is make people learn piece by piece. So like an 8-minute video, go like practice, look at the chart, try to understand it. Okay, you're done. You really get it. Move on to the next like 5 to 8 minute video and learn the next little piece. So it's about spoon feeding yourself information. And this is why what I do now would take every single person in the world 10,000 hours if they haven't traded before to get to this level. It just, you have to trade for years to see what you're seeing and understand it. And most people just aren't good at that. They're not patient enough. So, I can turn these bad boys back on here, right? And I can see stuff that you can't, right? And that's my advantage off of most people, is I can see stuff before it happens. And it's no rocket science. It's very easy to tell.
Just like having right? I was reading a book earlier, and
it's patterns.
Yeah, exactly.
It's a pattern. Like I look for an edge-to-edge trade. I look for Kijun bounce, and I look for Kumo breakouts and Kumo retests. That's it. Simple shit. And then what are we looking for bullish? We're above the cloud. We have a Chiku span that's above candlesticks, and that we have our green level, which is our Tenkin, above our red level, which is our Kijun. That's the main pieces of it. The rest is, are we at a support or resistance, right? If we're at support and we want to go long, that's a good time. We don't go short at support because that's dumb, because that's where the market's going to go back up, right? So understanding just 4 or 5 basic things and then looking for them constantly, you start to know what to do before it happens. That's the superpower, right? Like, why do you know, coach, that you should be short way before the whole market dumps and does all the crazy shit? Because TA tells me. Simple. I look at these things right here. So we go 30 from that, 30 days, like right around here, right? So I'm looking back and I'm seeing, oh, we're about to run into the candles. Oh, we go down here. Now we're starting to go lower. Likely we're going to go below the candles. Likely this Chiku span is turning bearish. Then what am I looking at? Well, if we keep going down here and then we get over here and we look, oh, the cloud looks like it's thinning, right? Oh, we might turn bearish on the cloud. Okay, now that's 2 indicators. Then I look at this, right as we're going to come here, I'm seeing this is starting to rise from here and this is starting to fall. So maybe we're going to have a bearish TK cross. Then I see, oh, we break into the cloud. I'm short. I'm short because we break into the cloud. It's likely going to the other side of the cloud. And then let's see what happens. And guess what? We break the other side of the cloud. We're going into Christmas. I think we're going to pump for Christmas as usual. We pump into the zone. We don't break out of it. And guess what you're going to do here? This is a 3 inside down right here. Boom. You're in the short again. And now you're short from all the way down here until this 3 inside up off the bottom. You can see it's closed above the down candle. And now you're long again. And now you have another 3 inside up. So you're already long. So you're like, sweet, let's just keep it rolling. And then you see you run into this resistance. You come back down. You might not be out of this trade yet. But when you come down here and you have your 3 inside down again off this resistance, now you're like, sweet, I'm going to add to my short and I'm going to run it even lower until you see probably this candle. And now you just break out. You end up closing this trade from over here for a small profit. Now, if you're smart, you're always taking profit constantly. So you're taking a little bit off, a little bit off, a little bit off. And you see this down candle and you're like, okay, I'm going to switch up my short and go long. You go long, you go long, you're long. And you're like, oh, wait, I've been long since down here, but I want to close it here because maybe it's going to go lower because we're at resistance again.
You just never
wait. Oh, now you're wrong. Look, but now you're wrong. You go short, comes all the way down here. Your short's probably going to be actually to here. You probably are going to short. You're going to close it because of emotion because this is like 2 weeks. You see this candle, you're likely going to close it. But guess what? You close it maybe for a small loss. Then you see another 3 inside down at the same level. Now you got to be sus because they keep happening. It's kind of like they're baiting you. I feel like that's baiting me at this point because it keeps happening. He's going at the same level and baiting me out. So like, there's times where you have to learn not to do something. And that's the hardest thing about trading. It's like, when shouldn't you go into a 3 inside up or down, right? Here's a 3 inside down. It's a good one, but would I have gone in off of that? Maybe because the Tenkin is acting as resistance, but really, am I going to go off of that? It's not really super strong, but it's kind of, We have a lot of levels right here that show us that we have liquidity pockets. Maybe I'd go. I didn't go in on that one, but maybe I would have. But it didn't seem like with this Darth Maul two-way candle, I was like, I don't know if it's going to go either way. So I'm going to wait. I'm be patient. Sometimes I'm okay to miss a trade. I'm okay to miss a trade because I was already short. I was already short from way up there. You guys have seen my tweets, right? Like shorted up here, kept shorting until I was like at $40,000 of my average buy-in, and I let it ride all the way down. I didn't do shit. All bear market, I mean, I closed a 7-figure short, just doing nothing but letting it come to me, letting it show me, okay, it's bottoming out. Now it's breaking out, close it, right? And then you close it and you're like, all right, and you just chill, you buy some Bitcoin with your profits, and then you wait for clear indications like we saw after this candle. We had this one. All right, now we have a bunch of green candles. Let's jump in. Let's see where this goes, because Bitcoin, remember, moves. All of its major moves happen over a few weeks to a couple months max. So like most of this move is probably done.
Yeah.
That's why I know we're going to go lower. Like I know we're going to go lower. Like unless BlackRock ETF gets approved over summertime, we'll likely go lower first before we go higher.
Agreed.
That's why I say what I'm
Agreed.
So yeah, we can look at more charts. Like I'm waiting for Dogecoin to get bullish because that's usually the start of the real bull market. Dogecoin, Shiba, at least pump first.
You think Doge? You think Doge and Shiba have another run at it?
Oh, absolutely. They always do. Every time we're in a cycle and people say, oh man, Dodge is done. Dodge goes almost like, Postal is 100x, right? So I don't think Dodge will do 100x now. Its market cap is still too high. But like when Dogecoin and these start pumping, that's when I'll start being like, all right, I really need to deploy the rest of my capital if I haven't deployed it yet. But that's what I'm looking for. But right now, like we could look at all these charts, but most of them look almost exactly the same. They're either in the cloud or just below it. They don't have all the check marks, right? They're stuck underneath the candles. Yeah, they have a TK cross, which is good, but like we're not inside the cloud yet. We have a lot of resistance from the 200 EMA, from the 100 EMA, so we don't really have like great setups. And I generally don't trade unless the setup is a good trade setup. Like you have to learn to do that. It's a long time coming to learn how to do that. But, there's not much more I could tell anyone other than take the time to learn one strategy, which is what I've done, and master it. Because you don't need to trade like everybody. I don't trade like everybody. I trade very differently. Some people say my charts look like Christmas trees because there's all the colors, but the colors to me mean something that tell me something that you don't understand if you're at home and you haven't set it up that way for that reason. So I have my own method to the madness, but could someone click on this and change the colors to them? Sure. You can change it to whatever you want, whatever works for you, right? If you don't like that many colors and you just want green and red candles and you want to make everything else white and try to figure that out, go ahead. Like I don't judge people for how they do it. And in general, like the indicator looks different. Like I'll show you, I've changed my indicator. If I go here and I click on the normal Ichimoku, look how it looks normally. It's a little bit different, but this actually sticks out to me more, which is why I don't use that one. I use it this way. So yeah, man, honestly, like Tyrell, you're going to learn a lot over the next year or two trading this, like how to trade it, like how to use it.
I'm simple.
Yeah, you've been soaking it up because you're like, okay, if I spend like a few hours looking at this and try to understand it, I'll probably be able to do it because it's just check the boxes, right? Like you look at you're looking at a few things. If you're below the cloud, we're looking to short. Where do we look to short? Off of the Kijun, bounce the Kijun, come back down, right? What else are we looking at? Is our Tenkin above or below our Kijun? So is the green above for bullishness or is the red above for bearishness? And then where is the Chiku to give us our final indication of direction? If it's above the candles like here, that could technically be bullish, but you can also see if it went sideways, they go into the candlesticks too. So it's stuff that like, and also like you were talking about the sloping cloud on BTC, that's another thing. So you're like, oh, but if we got above, blah, blah, but this cloud could like come all the way down and slope back up. They can also slope back down. So you have a lot of little tips and tricks you're going to have to just learn as you trade and know that like, okay, until you're above here, above the cloud, you're bearish. Until you're, until you break into the cloud right here, you might be starting to get bullish. And then until you're actually above the cloud, you're really bullish. So the idea of I'm bullish or bearish, I think people have misconstrued it completely. What you feel is what is bullish or bearish.
They try to play it like football, man. I'm bearish, I'm bullish. They try to play it like a football team, when it's not really.
Yes. That's an emotional thing. That's emotion. I want the market to go up, so I'm bullish. I want the market to go down, so I'm bearish. No, the market directs this based off of where the chart is. If the chart shows me I'm above the cloud, I'm bullish. Simple. On the daily chart, that is a macro indication of change. That's why I use the daily chart, because it shows me on a macro level, on a monthly potential level, where the market might go next, versus trying to do it on a daily level and getting wrecked like every other pleb out there. I do it slow. And you can either go broke very quickly trading on a 10-minute or 5-minute or 15 or 30 or hour chart if you're not really good at it, which I would say 99.5% of traders trading on anything under 4 hours are losers. They're probably the biggest losers. They lose all their money.
But this is
it's a greed.
A lot of times people don't realize that you use this strategy because it allows you not to be on the chart. So you can focus on a business, building, doing other things, advisory, deploying into private sales, fucking mentorship, building other businesses, whatever. And you come into the chart and you're rinsing over 3 to 6 months. You know what I mean? You just extra money on a longer term strategy. So yeah, I 100% think this is better than most things, because a lot of people try this short thing. They spend all their time on the charts. Unless they're a YouTuber, they're running out of money fast. Right? Unless you're a YouTuber saying, join my affiliate link, here's this, you're getting money from affiliates, you got cash flow. Unless you're doing that, you're going to go broke fast.
Yep, you will. This is my new baby right now. Osaka.
This is from the guys that did the 100Xs, right? On some.
This is like former founders of Shiba. Like, these guys tell me stuff every now and then about projects that they're working on. And, they kind of hit me up. They're like, dude, we're sorry we didn't tell you, but we did this on purpose, because they did an airdrop for everyone that was in Shiba early and sold early and like missed out on like 100 million gains like I did. So they airdropped people, but they didn't tell me until after. But now everyone who got the airdrop dumps, right? And then all of a sudden it starts to get the movement back. It's at this level I've been watching for a while. I mean, it went really hard yesterday. So I was like, okay, I'm going to take my initial off and then just wait and add it again. So I'm looking for either like it's sticking around 20 or potentially coming back down to this level at like 17. And then I'm going to buy
BTC, bro. That's just a candle. This is proper. This is confident.
So I'm just waiting on that. Obviously, it's a daily chart, so it's been out for a while too. Like, it's not a brand new project. When we're looking at like these types of levels, are they going to hold? So I'm just kind of watching, because if people just take profit, which is good, so they can rebuy in again. People don't understand that like taking profit's a good idea, because then if you want to accumulate more coins, if you just hold it, it goes up to 27 and you bought at 17. And then you never sell anything and it goes back to 17, you've made no money and you can't buy more. If you want to accumulate, when it hits like 25 and you see it starting to come down a bit, you take your initial outs, right? You leave the profit. And then when it comes to their buying zone, you buy it back in. That's the way you accumulate. This is how, I go from someone who has 100,000 tokens for 100 ETH, just as an example, and I could take that 100 ETH, sell on the way up, rebuy, sell on the way up, rebuy, and end up with 100 ETH still. But now my 100 ETH, the tokens is worth 75 to 100% more tokens. And when the market turns bullish again, now I have 100% more tokens, which means I'm going to make 100% more profit. But I've only spent the same 100 ETH. This is how accumulation strategies work. You can DCA, and I do that. And sometimes I don't go back because it's like on BTC, if you DCA it at like, let's say 16K or 17K, like down here, why the fuck would you ever take profit on it knowing where bull runs go for Bitcoin, right? So those levels you might want to do it. But when you were like shorting Bitcoin or whatever, and you're like, okay, it gets down to this level right here, and you see it break down, and you're like, maybe it's going to go back up from here, and you buy some, right? It goes up to here and you see it's getting weak and starts to, and so you break, let's say you take a $1,000 profit on BTC, then it goes much lower to here and you see it tap this level. So at 17.8, you're like, sweet, I'm definitely buying because that was the level I thought it would go to in the first place. So you set your buy orders. And now when it gets up to here and you're not convinced because it's August 2022, it's definitely still bear market. For me, it was like a guarantee we're still in the bear market, summer 2022. I'm like, okay, it starts coming down around here. And I'm like, okay, I'm going to take my money out because it's not really breaking above the cloud. It broke in and then it didn't break out. So I'm like, okay, right around here, I'm like, all right, I'm getting out. I'm already set my stop loss down here. So I've made from 17.8 all the way down to like 21. Now I've made like, let's say 3,000, just as an example, $3,000 per BTC. And I bought, let's say 15. Now I make $45,000. Now when it comes down to 17.5 and I want to buy more, or 16s, right? Now I just buy more. I get $4,000 more per BTC, and I can buy like an extra 2 or 3 BTC. That's how you accumulate. And that can be the same thing for any token out there, period. Does not make a difference which one. It's just understanding where you're going.
I agree, bro. I agree. So look, let's wrap this up, bro, because I respect your time, bro, and I don't want to take too much of your time. This has been an absolute, bro. This has been perfect, and this has been perfect. It's been a storm for everybody. So, look, bro, where can people find you, and where can they keep up with your channel, bro?
Over on Twitter, on Telegram, all the same thing. Coach K Crypto, very easy to find. And basically, yeah, if you guys go on YouTube, I'm also on there, same thing, Coach K Crypto. I do videos like probably once a month right now, but I'll be kicking that up a lot more once summer's over because my kids will be back in school. And yeah, the best thing for people to look for when it comes to me is just like my directional analysis. Here's the 3 and setup down videos. If you follow me, you can definitely watch that video, and kind of it will explain things really simple. And it's really hard for me to explain all the knowledge I have, just off the top of my head. So yeah, I talk about things like crypto projects, where the markets are going, all the way into like jokes about what people are thinking and saying when, newbies come into crypto, quotes, and then, controversial stuff about, men winning women's competitions. And then, you'll find once I see good trade setups, oh yeah, this guy's a scammer, name's Musa Nijay, he's in Dubai. Here's his passport. You can find him over there. And then yeah, basically, I'm in the THC game. So I have all these types of connections in Thailand for cannabis because that's my other side. But then I also tell people directional analysis on the market, make calls and stuff like that. But in the bear market, I try not to tell you too much stuff because I don't want people to get wrecked. Basically, my whole point is I want people to win. Here's another example of called comp. Told people it looks like it's bullish at like 55 on the retest, went up to $70. Really easy trade for people to make. And again, we had a bullish Chiku spin, our TK cross happened. We had a breakout trade, a retest, our cloud was green. Everything showed me that it's time to go into that trade. So stuff like that I will share. And if you're someone who's like, I need to learn how to do all this stuff, you can go to coachk.vip, and I have my website, and there's a way to join our club through through the DAO. It's basically a DAO structure, which I give people like my trading courses and my list of tokens that I'm looking at buying and accumulating and all this kind of stuff. You can go on here and don't click on the membership temporary, click on the membership. You grab one of those, it's transferable anytime. You can sell it to someone else. That's the way we can enter and exit the club. We do KYC, so we know who you are. You're not a scammer or someone who's on a wanted list or anything like that. But it's decentralized KYC. So obviously I want to protect people's identities, but if they do something bad, it's good that authorities can figure out who they are if they then, do what they do with Fractal and stuff. So yeah, that's basically a little bit about how you can get a little bit more access. The DAO does have access to things like Terrell also has when it comes to, access to crypto projects and things like that, and opportunities to connect with the investment side. And as a DAO, there's voting, people get to say what they want to do. And yeah, so that's I do a lot in this space. I can say trading is very much one of the things I focus on. But again, because like Terrell said, I can sit there and let my trades work. I don't really care. I don't have to watch the same trade for a week. You know, I just let it happen. The trade's set up. The risk is already put in. I know I'm going to lose if it hits my stop. I don't care. It doesn't make me emotional. And when I win, obviously makes you happy when you see the account close the trade and you're like, oh, I have more money. Sweet. Yeah, I'll leave it there. It's been a while since I've done a video. So yeah, sorry I went on run on sentences and shit. It's just too much to share, too much information.
I can't lie, Joe. You've got a wealth of knowledge, bro. A wealth of knowledge, man. So if people are gonna enjoy this one. People will enjoy
Yeah,
it.
man.
Time, man. I'll end the recording here.
Cool.